Good morning and good afternoon. Welcome to this Finovate webinar today. I'm Alison Jack. I'm editor of FinovateMiddleEast, and I'm joined on the line today with Devie Mohan, CEO of Burnmark, which is a global fintech research consultancy. And I also have Rosmah Ismail, who's member of Board of Directors at Arab Malaysian Chamber of Commerce and is also board member for AmBank Islamic. So welcome to you both. Just before we begin, I'd just like to mention to our audience that we'll be live tweeting this webinar, so you can join in the conversation using the hashtag FinovateWebinar. So the topic for today's webinar is financial inclusion, and this is really a topic that's been identified as key to the not only the Middle East and North African region, but globally. Technology really helps us connect with the financial world, but it's not the only factor. And so we thought it was really timely to discuss in more detail the successes, the challenges, and the opportunities that financial inclusion represents. During the course of today's webinar, we're going to be looking at great detail about the global fintech landscape and how better data collection and analytics can make customers make better choices. And so we'll be looking more closely into how we can serve the digital customer in today's world. So just before we begin, I'd just like to say a big thank you to our exhibitors and our sponsors for Finovate Middle East, which is our two-day FinTech Innovation Showcase and Conference happening in Dubai later this month. So our partners UAE Exchange, our strategic partner UAE Ministry of Finance, as well as Loxon Solutions, Profile Software, and a number of our marketing partners as well. So just before we discuss the issues around financial inclusion, I'd like to remind you all that we'll be holding interactive Q&A sessions. So if you do have any questions during the webinar, you can send them to us using Ask a Question button at the bottom of your screen. So Rosmah and Devie, I'd like to start firstly with looking at what you see as the successes, the lessons learned, and the opportunities that are represented by financial inclusion.
Thank you. I run a fintech research company, so I've been looking at data and numbers around what financial inclusion has done around the world and what we can learn from the UK, Europe, and other parts of the world. Now, the Middle East specifically is an interesting region because it's one of the fastest growing populations in the world, and it's very, very young as well. So the youth, and almost 50% of the population is aged 15 to 24. And this group is looking for completely different ways of dealing with their financial needs. So we find that they are interested in looking at new technologies, new apps, and new solutions available in the market for financial inclusion that was not available in the past. So this is really interesting in the region. And if you look at the rest of the world, there are examples in India, in Asia, in Africa, where the societies have become cashless and achieved a lot of success in financial inclusion without going fully the digital banking way. So there are several interesting stories, and the UK challenger banking market is a good example of that. And Middle East, of course, is a completely unique market, and I'm really excited with the amount of research we're doing in that region at the moment.
Right. And what do you think, Rosmah, the sort of successes and the challenges that financial inclusion represents for you?
Yeah, for us, especially for Malaysia and Asia, in particular, it's important to look at the population demographics, because in some countries you find that like what Devie has said, the population is made up of a younger generation, whereas in other countries in Asia, the population are made up of people who are already 80 years old and above. So when you look at what is your population demographics, then you can see how successful the plan will be, what kind of products, and also the timelines and the planning. All these will come into play. Like for example, in Malaysia, we have something like 32 million population, out of which about 21 million are adults. And in Malaysia, in particular, to open an account with a bank, you need to be 18 years and above. So so the number of adults, which is like the age of majority, 18 and above, is important to see how big the market is going to be. And the other thing that we look at is also the gender. How much of the population, how much the percentage is a male, and how much percentage is female. Because, but this of course depends on country to country and the social culture of each country as well. Like in Malaysia, there are a couple of states where women are more dominant, in business, whereas majority of the other states it is male dominated, and this is like cultural, and it's been going on for hundreds of years. So very little can be expected in this area. So in Malaysia, we have like 51% male population and 49 female. So it's kind of balanced. So when we actually look at what products are available and whether the women are also contributing to the economic development of the country, especially in the rural areas, so this aspect of gender comes into play. And then in Malaysia, the population is relatively young. Average age is something like 28 years old. So the needs of someone who's 28 years old will be different if compared to a country where the average age is, let's say, is 80, for example, or 60 for that matter, where it's already a retirement age. So the products and the lifestyle will be different. The other thing that we look at is also the urbanization. How much of the country is made up of urban population, and how much of the country is made up of the rural population. So in Malaysia, it's kind of balanced, and but the urban population has been growing quite rapidly, and it's now made up about 70% of the population is urbanized. So by urbanized, it means that the infrastructure is there. Not only the you're talking about the roads and transportation system, but more importantly will be the telecommunication system if you're talking about financial inclusion. Because in some countries, like in Africa, like some 10-15 years ago, they are more advanced. Their population is more advanced using mobile application. Whereas in Malaysia, we are now only going into mobile banking, because of security reasons. And of course, all these things is wrapped up, and regulated by our authorities, which is Central Bank, as also Minister of Finance. And so from here, you look at literacy rates as well. Because if the literacy rate of the population is high, then the chances of financial inclusion is better compared to a demographic population where majority can't read or write, and they may not be able to open a bank account. I look at the what Malaysia has gone through. When I was in like 7 years old or so, some 40, 50 years ago, 40 years ago, right? We have population who are from the older generation, but they are not literate. So because of that, they go to the bank and they do not sign their names. So we used to fingerprint them, fingerprint them for as identification when they withdraw cash from the bank and so on. So these are the various pointers which can pose as a challenge, but these are also the ones that pose as a as a success indicators of any plan of financial inclusion that the country may have. And in Malaysia, we tend to do things with master plans. We have 5-year plans, 10-year plans, financial development sector, capital markets development plan, and so on. So our experience of financial inclusion has always been part of this master plan, various master plans that the country has had. And that has kind of helped contribute to make the financial inclusion conversion more successful. And because it is managed more orderly and with targets to achieve throughout the various sectors.
Hello?
Hello, yeah.
Hello? No.
Hi, can you hear me?
Yes, I can hear you. Apologies, I'm not sure what happened there. So I was saying that we have a lot of questions that have come in while you've been speaking about. I'm just trying to rectify what's happened here. Okay, so as I was saying, as Rosmah was saying about the successes in financial inclusion, could you expand upon how you measure success in terms of financial inclusion? That was one of the questions we have had from one of the audience here.
Okay. We have a financial inclusion framework which covers various the plan, for like a 10-year plan, and then within that we come up with a financial inclusion index. But before we do that, one of the things that's being measured will be things like how much of the population. We have states all across Malaysia, 14 states altogether, both in Peninsula as well as on the Borneo subcontinent. And so we look at, out of all these states, how many bank branches, for example, there are in each state, or maybe in the other countries they call it a province, perhaps, So all across the country, how many branches that servicing all throughout the country, including the rural areas. And from there, it's like how many accounts are opened, and we have also the central bank plays a big role in this area because they came up with a regulation that governs the basic banking services. Yeah? So which means that it is every right of a citizen or a resident of Malaysia to be able to open a bank account. So the most basic of these are two bank accounts. One is called basic savings account. The other one is called basic current account. Now, SMEs can also, apply for these accounts. So these are very basic accounts, and no bank should turn down a customer who wants to open a basic current account or a basic savings account. So this is this is a regulation by the central bank, and within these guidelines, there are certain items, certain banking services which no fees are to be charged. Yeah, and so this is what the authorities provide to actually convert financial inclusion of the population. So which means that it is being monitored, each bank, how many accounts they open, how many are basic savings accounts, how many are basic current accounts. And then also internal telegraphic transfers are also charged at a very minimal fee, something like 50 Malaysian cents, which is something like less than 15 cents US, you know. So these are the things that we do to provide, basic financial services to the population. So in this way, you can see that what the conversion rates are. Yeah. So you monitor all this, and there are certain banks, especially local banks compared to foreign banks in Malaysia. They have branches all over the country. They have more branches compared to foreign banks, and some of these branches are opened at small towns, small villages, yeah, in order to actually service the population. So this is how we convert more and more of the population to become, financially, to make products financially viable for them. The other thing is that we also look at the number of ATMs. Okay? So sometimes the branch may not be available in a certain remote area, but like a grocery store, a retail store, a chain has been given an ATM kiosk within the shop or the building. Yeah. So which means that he becomes like an agent to service the customers in that area. So these are some of the things that we monitor, so that then you can see from over 5 years, over 10 years, what the movement is like, the conversion. So the index, the financial inclusion index, has been drawn up, and right now it's something like 0.1. So it's 0.9. So so it's quite a positive indicator compared to I think 0.7 in 2011.
Great. Just heard back from our audience. There is an argument that branches are dying rapidly. So in terms of branchless banking, how do you see that evolving with respect to the financial inclusion picture?
Yeah, right. In Malaysia, we have had. In Malaysia, we have had internet banking for some time, and of course, not everyone has. In those days, not everyone has a computer, to go to or an internet facility. But now, more and more, the move has gone through to do mobile banking rather than to open branches. So it's more of mobile banking. So this is where, the majority of the population, even the small farmers and the small shop holders, they have a mobile phone, yeah? So this is where the trend is moving.
Yeah,
Okay,
to add that, we did some research in the UK as well, and it's interesting that in a traditional banking market like the UK, 11% of the people prefer to use a branch, while 100% of the people and almost 30% of people prefer to use apps and websites, respectively. So there is a whole group of people who prefer to use apps and websites and never would walk into a branch unless they had a problem. And the reason they would walk into a branch is only because they get such poor service through a phone or through an app that they need to talk to a person. So it's actually a solution for them to, when they don't get what they're looking for, and by the time they reach the branch, it's very likely that they are going to leave the bank itself. So even though the switching rate is extremely low in the UK, you find that people leave because of poor service, poor security systems, and the lack of a personalized service, which is a problem. Now, when you translate that into financial inclusion, you find that the same thing exists. People are not looking for traditional modes like branches or even banks to get the service they need. And that is the beauty of new technologies coming up like the blockchain, because you can actually provide a much better quality of service and much better security and much better offers and a highly personal solution through the use of technologies compared to branches. And so most of the people we find in countries like India and China, they prefer to use WhatsApp for paying money over a wallet than using a bank itself. So you find a lot of people find financial inclusion through technologies and not through banks, which is the most interesting move that is happening in the world today.
Right. We just had another question for you, Devie, come in during that. And it's really moving towards the Middle East and North African market. How do you see the refugee population emerging as a new market for microfinance in the MENA region as a whole?
Yeah, it's again a completely new market that has been created and a completely new set of needs that have been created. There is a bank in the UK who actually services refugees exclusively. It's called Moniz. And the same kind of systems are happening in the Middle East as well, because people's identity are not being transferred to wherever they are going. It's a mobile population, and they could have a wonderful credit history and bank accounts and a good educational background and several things they had held on to as part of their identity in their native country. But the moment this movement happens and the refugees are going to other parts of Middle East and Europe, or they are migrating economically to the Middle East, for example, from India, you find that their original identity is completely lost. And that is a huge problem for them to get bank accounts and to get the services they need. And again, technology could be the answer here. I mean, it's a lot of hype, to be honest, blockchain, etc. But the fact is that the identity is stored in technology in one place. It can be accessed by any country and any population to provide the financial services they need. And that is the most important aspect that is missing today, in that the transfer of identity and the transfer of your background is not happening effectively. And this population is struggling to even get bank accounts or get access to the financial services. If you look at the traditional way of economic migration, people from India move to the Middle East and they send money back home. And when that happens, they usually do it through payments or foreign exchange services. And it is still expensive for them to do it. But now, with the help of these websites and with the help of the apps that like TransferWise, it happens almost instantly and with almost no cost. So there's a huge, huge change happening in terms of fees, in terms of services, and in terms of unmet needs for this group. And again, technology can do so much more than we can imagine at this point.
Question for both of you that has come in, and this is relating to, again, branches, bank branches. They're simply too expensive, and technology still needs to provide a solution, but it's not a PPS. So how much of the mobile banking solutions are really USDD based, your view?
In Malaysia, other than the physical branch, we have had mobile branches, which means it's in a vehicle. Yeah, so banks have got little like vans or a coach, yeah, that is actually a moving branch, and this is what they do. They go to the remote areas and the small villages where where you don't really have top-notch roads or to get to. So this is another way, another method of reaching out to the population in remote areas. But right now we still have these mobile branches, and currently in the major cities, the banks are starting to go big on mobile apps, and I think Maybank just launched some banking services with QR code on the phone, I think just a couple of weeks ago.
I think that brings us into an interesting question once again, looking at how many of these basic accounts or current accounts are maturing into loan or pension accounts, and what will be the conversion rate now in Malaysia in terms of those particular products?
Are you talking about the take-up rate for the home financing?
No, so it's really about the bank accounts or the current accounts maturing into loan or pension accounts cumulatively. What's going to be the conversion rate that we'll see now in Malaysia with respect to that?
Oh, okay. In Malaysia, we have our pension, so-called pension schemes, which is actually, we had a pension scheme, but now the pension scheme is no longer, being used because we have implemented for quite some time already the Employees Provident Fund. So the Employees Provident Fund is a national-based fund, which is contributed by both the employer as well as employee. So this is a form of forced savings that goes into the fund, and the fund does investments, and the maturity of the maturity date is when one retires generally, and then within before retirement there are certain amount that the employee is allowed to withdraw if it's for medical reasons, for education, for house financing, those kind of things. So if you're talking about retirement funds, it's basically separate from the normal banking services that an individual would have.
Okay, and I mean, I suppose in terms of the prepaid cards as a means of financial inclusion, for instance, with the UAE and its wage protection scheme, how do you see the role in particular of those prepaid cards evolving in terms of this context that we've just discussed?
The prepaid cards that you're talking about, is it smart cards with monetary points in it?
Yes, I guess yes, that's correct. Yes.
Okay, yeah, we have such prepaid cards here. It's similar to the e-government card in the GCC, except that this one it does not have the identity of the owner embedded in the card. You can actually buy the card and top up, however much you want, whether it's 10 ringgit, 50, 100, 200, and this prepaid card is now, it has evolved. Last time it started out just for paying the tolls as you go through the roads. If there's a toll to be paid, and you use it so that you don't have to pay by cash. So now you can use it to purchase things from certain designated shops, and that's an evolving product as more and more types of facilities can be put to use for this prepaid card. It's called Touch and Go.
Yeah, to add to that, I think in the UAE, there are two types of prepaid cards emerging, and one type is the prepaid cards launched by the banks themselves, and the rack bank cards being very popular. And another type is the cards being launched by the third-party providers. So again, financial inclusion happens in these two different parts. So there are the people who don't have a bank account but can use a bank's prepaid card. And over time, they're likely to get back into the banking system. However, at the same time, there are people who go for the latter part, going for cards like the Load and Shop or the MyNet card, where you never get back into the banking system, and they use the prepaid cards as a mechanism for having a completely new product or service that they never had in the past. For example, there could be people who prefer to load their US dollar currency on the prepaid card and use it in another country, or another product similar to that. So I think these two different types of prepaid cards are creating different kinds of solutions to the financial inclusion problem. But UAE is one of the largest growing markets for prepaid cards worldwide. And prepaid wallets is another example of currencies coming up in Turkey and Jordan, etc. So again, that's interesting as well.
In Malaysia, we have our national identity card, which is called My Card. Our national identity card has now it now has a microchip in it, and the plan is to have is for individuals to be able to use it like your smart purse, like your smart wallet. So you can put your banking accounts there and use it to make payments. Right now, you can actually put in, cash points to pay for the tolls on the My Card. So that's available right now.
Oh, Devie, we've had a couple of questions come in while you've been speaking. So looking firstly at the first question I have here is, other alternatives, we've talked briefly there about prepaid cards. What else, in your view, and I know you've done research in the area, particularly Turkey going cashless, for instance, but what are Middle East and North Africa markets doing to remove cash?
Yeah, that's my favorite pet topic. We have worked with the Turkey government and organizations to understand how they can achieve their goals of being cashless by 2023. And in doing so, we actually compared what other countries in the region are doing. And I think Turkey is way ahead of other markets in the Middle East, to be honest. But having said that, it's primarily because of factors like the amount of unbanked they had, who are keen to go cashless using technology. But we have seen that happening in other parts of the Middle East as well. So UAE and Dubai specifically is doing several activities to make this happen. And one of the biggest drivers for cashless societies to emerge are regulations, and the regulatory agencies doing things to promote it actively. It doesn't happen overnight. It doesn't happen because of fintech. It doesn't happen because of banks trying to go cashless for their customers either. It has to come from the government and the regulator. So the Dubai Financial Services Authority, and they have the innovation testing license, and they are actively encouraging innovation happening through the accelerator program, through the hub that they are building, etc. And because of that, the government and regulatory push is becoming really successful in that region, and we have seen a reduction of about 20% of use of cash in the last 5 years, which is significant for UAE. And we have seen similar reduction in Jordan, in Pakistan, in India. Again, in India, it's been a push from the government as well, with demonetization and wallets emerging like Paytm. There's also Saudi Arabia's plans for using blockchain for financial inclusion. There is a blockchain innovation lab being set up in Dubai. So there are several methods by which both the infrastructure is being created as well as the consumer solutions are being delivered. And it has to be through both the supply and the demand that the cashless societies can happen. So you need the technology and the infrastructure to make it happen, like the blockchain solutions that the regulators are building, as well as apps and consumer wallets and fintech companies working to ensure that consumers are willing to adopt as well. Now, I think I keep talking about apps because apps are a big thing in the UK and in Europe, but we need to understand that app is just one channel to make financial inclusion happen. And people don't have smartphones in that region like we have in Europe. So we need to be mindful about that. And there are amazing solutions that are coming up in basic mobile phones without any functionality that are impressive in the region as well. For example, a fishing town now uses basic text messaging to create a marketplace for fresh fish. So before they land back in the land, they come back to the land, they are able to sell off the fish to the highest bidder. And it all works through text messaging. So there are solutions emerging outside of smartphones and apps through WhatsApp, through basic text messaging that people are adopting significantly in that region. And the biggest innovation right now is happening around remittances, foreign exchange transfer, payments in that region compared to other things. But these are all going to lead to a cashless society in the next few years.
There were a couple of questions again that came in for you, Devie. One of them, I'm just going through them, is the scope, in your view, to leverage the successful model, as in Africa, Rwanda, for example, bank population there is only 24%, to refugee population in MENA, whereas the successful strategy to financially include unbanked population through phone and digital wallets. Are there other challenges like integration into the labour market and enterprise market, right to work, which are also discouraging banks to finance refugees?
Yeah, absolutely. Again, that's a problem, I think, very, it's a big driver in that region. And one of the things that happens is that the population, the labour market, it's very, very flexible and mobile, as well as being poorly educated about the choices they have. And that is one of the biggest issues, I think. So the debit cards and credit card and the prepaid market is quite well saturated, and there's enough education about what is possible using cards. But what is not currently available to this group is the other technologies that are present in Europe and present in Silicon Valley, but that could be extremely relevant to them. For example, in Colombia, in Latin America, there was one big initiative that happened to convert a town to go completely cashless because of crime, because people were not able to take buses or taxis to go to their nearest town and to study and to shop. And the government took an active decision to make the city cashless so that people can travel anywhere they wanted. And what happened was, again, there were no apps or digital channels pretty much, but what they did was convert the cash machines into points of education. So anytime someone goes to a cash machine to withdraw cash, they would be given the option of using a mobile wallet instead. And then they would be actively encouraged to use the wallets instead of drawing cash. So we need to work within our existing supply chain and the existing infrastructure and slowly convert each of those points to digital first, and then they would be more willing to adopt. So that is the slow, gradual path that some countries are taking, versus the big jump directly from nothing to the completely big unbanked market to completely virtual wallet-based markets as well. That's the other path that countries are taking. So in the Middle East, the first path works in that there are people familiar and using a current infrastructure to make remittances and survive in the labor payments market. And these people can be brought into the digital world through small changes and through education. And once that happens, they would be in a more formal system, and then they will have access to more choices. So it will be a slower process, but I think that would work best in the Middle East.
Just before we move on to talk about another area which is really important, is about the transformation in terms of financial inclusion and how financial inclusion is only part of the picture. There's a question that's come in here as well. So what opportunities are there? This is for you, Devie. What opportunities are there for e-commerce and online shopping? It's showing massive growth globally. And how do you see the unbanked markets participating in this?
So again, I think the unbanked market is very, very interesting to the e-commerce space as well. So if you look at what happened in Turkey, as an example, if you look at 2008, 10 years ago, most of the transactions were based on cash and debit cards. And the cashless transactions were around 1.7 billion transactions a year, which is not a big amount. But now, if you look at it, it has become almost 3 billion, more than double, almost double the amount we had 10 years ago. So I think with the right messages during the shopping journey, this can happen. The conversion from debit card and cash use to completely cashless transaction. However, it means that the e-commerce transactions and the marketplaces are empowered with the right tools as well. Let me take Paytm as an example from India, because it's a fantastic case study of how this has happened. Paytm, when they started, it was a mobile wallet. And it's hard to convince people to switch from a debit card to a mobile wallet for no reason. I mean, they have no incentive to really move or make that shift. But Paytm started launching all of the e-commerce offers in India in one platform. They would have Uber, they would have Big Bazaar, they would have all the shops offering discounts and incentives for people to go through Paytm and use that e-commerce service. So it became a marketplace and a platform where people could access and do shopping, hire a taxi, anything they want at a much discounted rate. And then that translated to higher mobile wallet acquisition as well. So one thing has to happen, some major push has to happen for people to use an option of a digital technology when they have debit cards as an option today. So that is the biggest challenge on the e-commerce and shopping front, especially in the Middle East, where credit cards are much more used than debit cards as well. So there has to be an aggregator or major push happening either from a government side or from a platform side where people have an incentive to move away from it. And it's a challenge. It doesn't happen overnight, and it's something that, again, we can learn from countries who have gone that path, like Turkey and Malaysia have done some amazing work in that space. Singapore is trying to be there. So there are several countries who are doing that, right?
Rosmah, do you have any thoughts to share on that area?
Yes, if I may add to that, in Malaysia now we have initiated the halal industry, and the online initiative now is the global halal data pool. So that is not just Malaysia, it is for the international market. And this is actually to put all the producers of goods and services that is halal on this global directory, where it will facilitate trade among all the registrants. And what we have done within Malaysia is that we have put in all the SMEs especially, and all the small industries on a program to get them to be export ready. Yeah, so in this way, the spillover will be that these smallholders and entrepreneurs and cottage industries will be developed to reach SME status, and from SME to a bigger corporate company, and therefore they will also be given a financial package, financial services, which means that they will be using the bank's financial services and products, and that's how the take-up rate for the financial inclusion can be improved. So, and on top of that, the Halal Global Data Pool also has an app where you can, anyone can actually go to a supermarket, for example, and just scan the QR code, and it will verify whether this particular product is halal or not, and from which country. So this is available on via a mobile app on the phone, and that's already been launched a year ago. So this initiative is actually global. And I think right now it already has more than 50 countries, I think, already signed on to develop their SMEs and on this platform.
All right. Just going back to what Devie was saying earlier, we've had a question about when you were talking on Saudi Arabia using blockchain for financial inclusion. They'd like to know the source of how you know that that's happening.
Well, it came up in some of our research, but again, happy to have a separate chat and discuss I'm happy to give the link to the person if needed.
Okay, great. We're coming towards the end of this webinar. Unfortunately, there's been so many questions this morning and this afternoon. Just touching on a couple before we draw things to a close. So this question is for Devie. So given that the cultural norms are being more stringent in the Middle East, how do we make women participate in the financial system? What's the current level of participation of women in the financial system as a whole?
Well, I'm probably the wrong person because I've never lived in the Middle East. But I think bringing women into the financial system is a global problem. And I think Rosmah has spoken a little bit about that as well. It's a different set of challenges. I'll give you an example from the investment world. I think everybody knows that women think about investments completely differently from men. Now, what that means is men can be asked to create a portfolio based on their risk levels, their comfortable risk level. So they can be given 3 choices, like in the apps you see in Europe, like Nutmeg, and they can pick one of them. Now, women don't think like that. Most women still don't know what their preferred risk level is. So if they are given an investment or a robo-advisory platform and asked to pick a portfolio based on what they're comfortable with, they wouldn't know. And it's very likely that they step away from the choice and say, okay, I'll just do it my way, and I don't really understand this. So there are several solutions now coming up to educate women about what they're actually comfortable with before they ask to do the investments through these platforms. So that is the first biggest step. You need to ask them to figure out how much risk they're comfortable with. And one of the startups I've worked with, they ask questions like, do you like roller coasters? Or do you like scuba diving in Australia? And based on the kind of answers they give back, they understand the risk that they're willing to take. And that goes into their investment choices. So the education, understanding themselves, and figuring out your own personal financial profile, I think that is where we are still missing. The huge gap exists today in terms of bringing women into the financial system. So I think we need to fix that first before we can offer them solutions and accounts and products that they may or may not like because they don't really understand themselves. So there are so many products in the world launched by banks, targeting at women, using advertisements of women doing the thing that they like to do, but it's not working. And I think we need to think about that completely differently now.
In Malaysia, we have been targeting women to make them more aware of education and finance. For, I think, there was a very targeted plan way back in the 1970s and 1980s, where more and more women are encouraged to be to contribute economically to the development of the country. So in Malaysia, we have like 8% of the unbanked adult population. Out of the 8%, half of it is women. So it's actually quite balanced in a way for Malaysia. And but one of the indicators that we are looking at going forward, one of them is gender, and the other one is SME development. So under the gender, also the indicators that we are looking at will be account ownership, which is bank account ownership, and how many active users are there, and so on. And there are also targeted products for women, because we find that women investors or women who are involved in financial decisions tend to look at family-oriented type of issues like education, health, the household income, those kind of things. So even under insurance plans, Takeup plans, Islamic finance, certain products, are targeted for women, looking at how a woman actually view the security of the family.
Okay, great. And I mean, this brings into play, I think, at this point, an interesting question, and that's looking at beyond the banks, which we've discussed quite a bit detail today, at alternative finance players. So the non-bank actors, for instance, we were talking there about prepaid cards earlier, outside of the banks. If it's not a prepaid card that's run by a bank, where are the sort of non-bank actors in that space? And this question is actually for both of you, and it relates to what you see as the extent of the participation and the contribution that non-bank actors will take in this financial inclusion picture.
I can answer that first. And I think cards and payments is still the biggest space for alternative players. So again, just to list the non-banking players. So there are prepaid cards, like we discussed, who are launched by non-banking players. So that's one big market in the Middle East. There are people who are offering payment services. So again, remittances, foreign exchange services, again, quite famous and popular without having to name them, I believe, in the Middle East. And then you have the technology players who are actually separate from all of these and sitting kind of alongside the banks as well as alongside the other players and also offering their own services. So these are the people like TransferWise and WhatsApp-based payments and all of that. Then we also have the microfinance organizations. So the microfinancing, again, is hugely popular in South Asia, in the Middle East, and it's a huge market in itself. For example, there's an organization called Microcred, and it's a $12 million investment into financial inclusion across 3 countries. So there's a whole big market and a lot of investment available in that space as well. And then you have the support from governments and bodies like the IFC, FINCA, UNCDF. So all of these organizations are also encouraging players, and also they have a big role themselves in what's happening with the alternative financial play in these markets.
Rosmah, do you have
for Malaysia, yes. Yes. For Malaysia, the financial industry and also the payments industry is highly regulated. So because of that, people are also quite conservative. Yeah, and the central bank, looks at customer protection very seriously. So the important thing to look at also, besides the technology, is also the what is responsible financing, responsible financing and consumer protection.
That's all we have time for, I'm afraid, today. Thank you very much for joining us today. If you have any feedback on today's webinar or any recommendations for future webinars, please do complete the survey at the end of the webinar. It should flash up on your screen. I'd like to thank once again our strategic partner, UAE Ministry of Finance, our sponsors and exhibitors for their support. And we look forward to hearing more from Devie and Rosmah later this month in Dubai. You'll shortly receive an email with a recording of this webinar and an exclusive 10% discount for the event taking place on the 26th, 27th of February. Thank you very much, everyone. Thanks for listening, and goodbye.
Thank you.
Thank you, everybody. Thank you.